Let's get to Phil LeBeau with more on Tesla and whether that stock is ready to rally. Hey, Phil.
Hey, Melissa, when you look at Tesla shares after they report deliveries over the last 3 years, they tend to move higher. Now, what we've seen since Friday when Tesla reported its sales is the stock was down a little bit. It's indicating a little higher this morning, but no appreciable movement. Remember, on Friday morning, the company reported that it delivered a little over 200,000 vehicles for the second quarter. That was roughly in line with expectations. The exact number, 201,250 vehicles. Those deliveries, it's sort of been the point over the last 3 years where you see the stock move higher because we crunched the numbers. We had our data team crunch the numbers. What happens with Tesla shares 2 weeks before the quarterly delivery announcement and 2 weeks after the quarterly delivery announcement? No comparison in terms of performance. The shares move higher. There you go, Joe. Higher in the 2 weeks after the announcement, appreciating almost 17%. Not much movement in the 2 weeks before the announcement. But keep in mind, all of this is because you have people who are A, maybe encouraged by the delivery news, and B, buying into the stock ahead of the quarterly financials reports, because we usually get deliveries about 4 to 6 weeks before the quarterly financials report. We're going to get those from Tesla and its Q2 results. That's expected later this month, guys. So watch Tesla shares over the next couple of weeks. Let's see if the trend holds that we've seen over the last couple of years of the stock moving up after it reports deliveries.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So the folks over at CNBS have crunched some numbers and are really going out on a limb here, claiming there's a very strong chance the Tesla stock is going to gain around 20% approximately over the next week. We heard there that historically going back all the way to 2019, aka yesterday, in the 2 weeks following Tesla's delivery announcement, Tesla stock tends to be up over 16%. However, since Tesla's delivery announcement this time around, Tesla stock is down almost 5%. Therefore, based on the numbers and the implications here, CNBS are effectively claiming that Tesla stock is going to gain about 20% in the next week. So in this video, I'll share my thoughts on these predictions and we'll also discuss the potential of whether or not Tesla sold any Bitcoin during Q2. So let's get into the video. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
They just had a delivery number, and maybe historically that could be decent for shares. What are you going to tell us?
It tends to be one of those bell-ringing moments where investors can count on at least the 2 weeks after a deliveries report for the shares to move higher. We had the data team crunch the numbers going back to 2019, looking at the 2 weeks before a delivery report and the 2 weeks afterwards. And it turns out that the 2 weeks after the announcement, look at the average gain is just over 16%. Remember that Tesla reported its earnings, its Q2 deliveries on Friday. So what has the stock done since Friday morning when the delivery announcement came out? Not a whole heck of a lot. Down, 3.5%, 4.5%. But it's early. It could be that the stock ends up being up 10, 15% when we're 2 weeks from that announcement. As you take a look at Tesla's annual deliveries, remember the company has been on a steady trajectory over the last several years.
I just want to take a quick moment to pause here and admire the beautiful exponential growth in Tesla's annual deliveries. Those of you who saw my recent video, Why You Will Never Understand Tesla Without Knowing This, will recall point 4 in that video was about human beings having an inability to intuitively understand exponential growth. If you haven't seen that video, I'll put a card in the corner. I recommend you guys check it out. This is really important stuff if you truly want to grasp what Tesla is and what their future looks like over the next 10 plus years. With this image in mind of Tesla's annual delivery growth to date, I'm now going to bring you guys over to my Tesla projections for their deliveries over the next decade. This is my bear case for Tesla's deliveries going out all the way to 2031, starting over here, 2021, bear case about 940,000 deliveries. You guys might notice something. This looks like a seamless continuation of the same exponential growth curve. I recently heard that Morgan Stanley, in their absolute bull case, are expecting Tesla to deliver just 8 million vehicles in 2030. In my bear case, I've got them at almost 20 million vehicles. The thing that Morgan Stanley don't seem to be able to grasp is either exponential growth or the fact that one company could actually continue to grow at this rate. But all the evidence is there. Tesla simply needs to continue growing their production capacity at approximately the same rate that they are now for the next half a decade, then slow down towards the tail end of the decade and they will get there. In fact, if we look at the growth rates that I'm assuming here, we've got an 87% growth rate in 2021, 63% in the next year, then another 60 odd percent, another 60 odd percent, another 60%, then a massive drop down to about 34%, 35%, 28%, 18%, 7%, and then 4.5%. Tesla only needs to sustain for about a 5-year period growth in excess of 50%, and it's going to be a cakewalk to get to 20 plus million vehicles by the end of the decade.
The expectation for this year, after reporting more than 200,000 in Q2, is that the company will deliver more than 800,000 this year.
No shit, Sherlock. I mean, goodness me. Duh. I don't think there's anyone out there that's dumb enough to be predicting even close to 800k now. Unless, of course, they either don't have a brain, don't have testicles, or they have neither of those things. I mean, it's quite obvious. Tesla's continuing to ramp their production, and we've got Austin and Berlin coming online later this year. Now, even if you exclude those factories, we know that Tesla is still continuing to improve production out of Fremont, keeping in mind that there was almost no Model S or X production in the entire Q2 because there was downtime, the Plaid version just coming online and ramping up now. So I know that Fremont is going to be outputting many more vehicles in Q3 and Q4 than it did in Q2. And we also know that Shanghai continues to ramp production as well, which means that even if Austin and Berlin don't come online, Tesla's Q3 is going to smash their production and delivery records that were broken in Q2, and Q4 is going to smash those records again. Obviously, Tesla is going to deliver well in excess of 800,000 vehicles in 2021. I mean, duh. And just to give you guys another example of exponential growth, let's assume, very conservatively, just to illustrate a point, that Tesla only delivers 800,000 vehicles in the full year 2021, but they're able to grow production year after year by just 40%, which is well below the target Elon Musk has publicly stated of over 50% per annum. Where does that get us in 2030? All right, calculators out. Now, don't worry, this won't take too long. So let's assume a mere 800,000 vehicles produced in 2021. Just for example's sake, let's assume that Tesla can increase production by exactly 40% over the next 9 years. That takes us to 2030. How many vehicles could Tesla produce in 2030? If they're able to ramp production by 40% per annum over the next decade? Like I mentioned, well below Elon's target. Production in 2022, 23, 24, 25, 26, 27, 28, 29, 30. Oh no, they fell short. What does 31 look like? Oh, I see.
We'll find out what the Q2 financials turn out to be probably later this month. That is the expectation after reporting deliveries that were roughly in line with expectations on Friday. So, Scott, when you look at shares of Tesla, I get this question all the time from people. Will it move up before a report? Will it move down? At least when it comes to deliveries, historically, it tends to move up in the 2 weeks after a delivery report.
So as I said earlier in this video, based on CNBS's projections here, we can expect to see Tesla stock up about 20% over the following 7 days. Let me know in the comments below. What's your prediction? What's Tesla stock going to be worth on Friday next week? And by the way, guys, I'm just going to chime in here. What's happened in the past is completely and utterly useless, or almost entirely useless, in predicting the future, especially when it comes to the stock market. How can I say this with such a high level of confidence? For one, if the past was a useful indicator in potential movements in stock prices in the future, there would be a lot of trillionaires on Earth right now taking advantage of this knowledge. As far as I know, there aren't any trillionaires, especially no trillionaires who've made their money in the stock market by relying on past data as evidence of what's likely to happen in the future. If you know any exceptions to the rule, please let me know in the comments below. And that being said, it can be interesting to watch this. Sometimes we might notice recurring patterns. It might be a fun little game to play and notice a few patterns here, and maybe this is right like 60% of the time, but let's be honest here. Nobody knows what's going to happen to the price of any stock tomorrow, let alone next week, next month, or next year. This is why I don't gamble over the short term. I much prefer to be a long-term investor, buy and hold. I can tell what's going to happen to some stocks over the long term with a very high degree of confidence. But the shorter the time span, the less idea I have.
All right. Good stuff from you, Phil. Good stuff from our data team. We appreciate you both. Thank you very much. Joe Terranova bought Tesla on June 22nd, $628 has a stop there. That's a 200-day moving average. What do you think about Phil's report?
Well, I like Phil's comments there, and clearly we were underway towards $700. We had about a 10% gain on Tesla. It's pulled back here in the last couple of days, somewhat puzzling because it should be performing well in this growth-oriented environment.
So for those who don't know, Joe, I think it was on CNBS Trading Nation, recently disclosed a Tesla position. It was more of a short-term momentum play. Don't quote me on that. I think that was the rationale there, not a long-term buy and hold. Obviously, as we're learning here, anything can happen to stocks over the short term. And again, I just want to reiterate the point. I know for a fact that in Q3, Tesla is going to crush every record they broke in Q2. And then in Q4, they're going to do the same thing. They're going to crush all their Q3 records. Then next year, Q1's going to crush all the Q4 records, and so on and so on and so on. Over the long term, the trend is quite clear. So why take the risk in gambling over the short term when anything could happen to the stock price, when over the long term, the trend is going to be quite clear? It's going to be volatile, but obviously headed to the moon, maybe even Mars. I just don't understand. Maybe people just get itchy fingers. They just want to do something, but I just don't get it. Like, maybe I'm a simple man. You know, if I want some extra excitement in my life, I'll just give your mum a call.
But as you mentioned, the stop is in place. You've got a great point of reference at 628. If you want to risk a little bit more, you go down to the mid-June lows at 595. I'm going to stay with the position, and hopefully Phil's going to be right on the expectation.
And now we're going to move on to Tesla's Bitcoin position and how that's going to impact their Q2 financial results.
Bitcoin hovering around the 33,000 level after the long weekend, about half of what it was worth back in April. These price declines set up some accounting headaches for companies like Tesla that hold it on their balance sheets. Kate Rooney joins us with more. Hey, Kate.
Hey, Joe, these price drops, the price drops you just mentioned, and Bitcoin accounting rules could tee up some new losses for Tesla when it reports at the end of July. Tesla first disclosed its crypto purchases back in February. We don't have exact timing, but analysts think it was around that $32,000 or $33,000 level. Bitcoin sunk below that price in the last quarter, meaning Tesla will face what's known as an impairment charge. Tesla holds crypto as an intangible asset, and because of accounting rules, when Bitcoin's value drops below a certain amount, companies have to mark that down in their financial statements. In an SEC disclosure, Tesla says if Bitcoin's price falls below the carry cost, or where Tesla bought it, at any time after they bought it, an impairment cost is recognized. But on the flip side, Tesla can't mark up the value of its Bitcoin. That is, until a sale. Analysts I've been talking to are looking for between a $25 million and a $100 million loss for Tesla on paper in the next quarter.
Okay, so just a couple of things here. First of all, it's obvious that Tesla is going to show a Bitcoin impairment, therefore a loss in their Q2 financials, which is going to be a drag on their financial results. However, there may be a silver lining here. Now, I'm no expert, especially on US tax law. I'm based in Australia, and I also pay a brilliant accountant to understand this stuff for me. And by the way, just a side note, those of you who run businesses, have multiple investment assets, multiple income streams, etc., if you don't have an absolute gun of an accountant, you're an idiot. Yes, I said that. Yes, I mean that. They will save you so much more money than they cost, even if you're paying for the best of the best. Just a quick aside. Now, the point that I want to make here, and I could be wrong, so please, somebody who understands this stuff a little bit better than me, please let me know in the comments if I've made a mistake here. My understanding here is that Tesla may actually be able to claim a tax deduction on this Bitcoin impairment, even though they haven't actually realized a legitimate loss. It was just a decrease, temporary decrease, by the way, in the value of the asset during the quarter. This to me seems like a 200 IQ accounting trick for Tesla to actually advance their financial situation even further by using this accounting trick. Anyway, as I mentioned, I am a little bit out of my depth here. Maybe this is not a possibility. Maybe Tesla won't be able to do any tax loss harvesting as a result of this accounting clause, but it's something to pay attention to. Please, if anybody understands this a little bit better than me, let me know in the comments below if this is going to be possible or not. I mean, it does sound too good to be true. Then again, something else that sounds too good to be true is other automotive manufacturers paying Tesla money to put them out of business in the form of zero-emission vehicle credits, which we're seeing happen. So who knows? Anything seems to be possible in this simulation.
They tell me this is really a Rubik's Cube to figure out, and an overhang lately on the stock. They are expecting more quarter-to-quarter impairments along with Bitcoin's volatility, though. The big thing crypto and analyst communities are watching, did Tesla sell any Bitcoin in the quarter to make up for some of those losses?
Now, I'm going to go out on a massive limb here and say there is literally zero chance that Tesla sold any Bitcoin in the quarter to try to counteract the potential impairment as a result of the Bitcoin price going down during Q2. Zero chance. How do I say this with such confidence? Because Tesla doesn't give a fuck about short-term financials. They care about their mission. They care about growing production. They care about improving their manufacturing techniques, driving their costs down, increasing their features and functionality, okay? Now to be clear, CFO Zach Kirkhorn is doing an amazing job with Tesla. But Tesla isn't the kind of company that's trying to appease dopey shareholders. And they never will be. It's not in their DNA. It's not in their culture. Mission comes first. If Tesla were run by actual morons, there'd be a very high probability that they'd be like, oh my gosh, man, the shareholders are going to be pissed. We've got a Bitcoin loss. How can we fix this? Oh, we'll sell some Bitcoin, then there'll be no loss. Good idea. Let's do that, bro. But it's not going to happen because they're not idiots. And they're not trying to appease dumb shareholders. So it's not going to happen. Literally zero chance. So I hope you guys have enjoyed this video. It'll be fun to see what does happen to Tesla's stock price over the next week or so. Who knows? Could be up, could be down, could be flat. Nobody knows. That's the whole point. And besides, who cares what's happening to Tesla stock over the short term? I'm more interested in what it's going to be worth in 2030 and 2040. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.